Hey traders, Raghee here, and in this update, let's talk a little bit about what we've seen today and how we can capitalize on this. Now, when we have a sell-off like this, what I've been doing throughout the afternoon and what I'm going to share with you right now is what I've been looking at on the daily time frames. Now, I've had an intraday bullish bias and all my cards on the table. It was an interesting and maybe a little frustrating day if I was looking for long positions as I was earlier this morning. But I shifted gears. Once I realized my day trades were not going to follow the process that I prefer to see, the process that has worked for me day in, day out for decades, I shift gears. I don't persist. I don't try to get my lunch money back. I go look for opportunities in the case of the kind of sell-off that we're getting. And look, if you've been waiting for a pullback, buy the dip is the mantra so often, right? But it all sounds good until you have to do it. And a lot of times it's going to come like this. Maybe not quite the scale of this sell-off, but it's going to come like this. So what I mean by that is it's going to come on bad news. It's going to come on, the fact that maybe the Federal Reserve can't do enough, but maybe we are looking at a second wave in terms of the COVID virus. Maybe we're being, today anyways, more realistic about some of the economic fortunes that we might see going forward. Maybe misfortunes, right? So the market chooses its topic. The market chooses its narrative day by day. Actually, nothing that I've seen today wasn't something that could have been discussed, could have been valid 36 hours ago, 72 hours ago. So why today? It just happens to be today. Maybe a post-Fed let-off, maybe a new high let-off, who knows? But let me mention this. I'm going to share with you the notes that I have here. And here we go. This is what I'm going to be diving into more detail in my premium video, but I'm going to share with you guys right now. This is from the notes that I send out to members each and every day. And well, not quite every day, like tomorrow might be a lighter set of notes, right? But we send out a series of notes that have my trade alerts and my ideas for the day. Well, this is what I'm looking at into the close. This is what I'm looking at into tomorrow. This is what I'm going to be looking at Monday. So a couple things to watch in today's sell-off. One, do we close near the lows? I'll be asking the same question tomorrow as well, by the way. If so, if we close near the lows today, which it's looking like it will, I'm cutting this video about 20 minutes after 3. If so, I will expect some, although less, following through to the downside tomorrow. This move today, will also get a lot of that pit bull low attention because the pit bull low is the second Thursday, Friday of the month leading into the third Friday of the month and options expiration. So there's going to be a lot of discussion about this being the pit bull low. Please remember this about the pit bull low, which, by the way, if you're not aware, comes from Marty Schwartz from the Market Wizards. That was his nickname, Pitbull, the Pitbull. So this is a tendency and not a setup to me. And if there is a setup, the follow-through is to Monday and possibly Friday of the options expiration week. So if tomorrow's session is flat to down, let's say we start punching in lower lows, will traders want to hold a position over the weekend? Will they want to hold their position into Monday? Or would they rather just wait to Monday? And I'm thinking they might just wait to Monday. So in the meanwhile, rather than jump in today, although it's tempting, I'm going to be patient. But look at my watch list. All right, it's the sectors, and it's then going to be even more granular. The stocks that are heavily weighted within these indices that are what I call double green. And this is what I mean by that. 8 over 13, 13 over 21, 21 over 34 EMA wave. And so what's meeting that criteria right now and pulling back into conservative, lower risk zones. Low risk is not synonymous with higher probability, by the way. Again, it just means low risk. Relative to aggressive and moderate risk zones. In other words, that entry, a conservative or low risk zone, is closer to a stop loss. That's all that it denotes. So I like these conservative setups. We're seeing them in the Russell, the S&P, the Dow, the XLC, the XLB, the XLU, XLV, SKY, SKYY, IYT, IYZ, and JETS. That's on my list right now. Might there be a few more tomorrow? If we sell off, perhaps. So with that list, I'll go forward into tomorrow, look at whether or not, and ask those same questions, whether or not today's the day to start looking to the long side. I don't think this is the beginning of the end, gang. I think this is a pullback. I think there's a post-Fed letdown potential pullback. Who knows? But I do not believe this is the beginning of a more precipitous downtrend. Although, I want everyone to note something. Today's action is extremely high volume. And one thing that a lot of traders like myself, who, when it comes to asset bubbles, this is not our first rodeo, will tell you is in asset bubbles, it's not unusual, especially what we had in this one. Its up days are, relatively speaking, lower volume to down days. Today is a pretty big volume day. Let's see what happens tomorrow. Let's see if we can tighten up this watch list between now and then, with the goal being a potential entry on Monday. Hope this helps, and I'll see you in the next update.